Hey everyone, this is Dr. Duru from Analytics with the market breadth. Okay, usually I start with a quick scan of the news headlines. I'm going to skip that. I think the biggest news of the week was the inflation news, but I have a lot to say about that. I'm going to write a separate blog post on inflationwatch.drduru.com. So if you're interested in the big inflation news of the week, you can go there, and later on I'll post a link to the article in the comment section and in the description. So let's dive right in. This is my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50 for above the 50. Um, Earlier this week, I posted a short noting that um, AT50 basically surged a huge amount, 13 percentage points, 15 percentage points on Tuesday and Wednesday. And this broke sort of my constant complaint about market breadth being basically diverging in a bearish fashion away from the major indices, the S&P 500 and the NASDAQ. So now we're back to a more neutral ground in terms of the two. Market breadth is still lagging, but it's much, 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 much better now. And then the same thing for AT200, which is the percentage of stocks trading above their 200-day moving averages. You could see it jumped over those 2 days where AT50 jumped, AT200 also jumped and briefly jumped above this important line that I've drawn at 56.1%, which represents its level when the S&P 500 was last at its all-time highs earlier in the year. Now, the market breadth pulled back sharply on Thursday because of the inflation news and pulled back again on Friday. So I don't have quite confirmation that market breadth has turned around in a strong fashion, but that is basically to be seen next week. We know that this is a seasonally weak period for the stock market. I call it the most dangerous months of the year, August, September, and October, but it's because of drawdowns, not because of absolute performance or even relative performance for the months. It's really, these are the months that tend to have the biggest drawdowns of the year. So it's actually not something to fear. It's something to welcome because typically those big drawdowns in these 3 months are buying opportunities. I suspect that will be the same if we get a decent drawdown in any of these 3 months. I thought at the beginning of the month we are going to get one of those, and instead the buyers, as I wrote about and talked about last time, the buyers just jumped right in and the market just soared right away. In fact, let's just go straight to the chart so I can talk through that action. You could see here, this is was the big concern on August 1st. S&P 500 dropped 1.6%. And basically, the index hasn't looked back since. You could see this steady, steady, steady march higher to all-time highs. And even the big market breadth pullbacks that we had on Thursday and Friday, you could see that the S&P 500 actually was up on Thursday and barely down today, Friday, 0.3%, closing at 6449.79. So if things continue the way they're going on Thursday and Friday, we could unfortunately be right back into a bearish divergence with market bet. But for now, I'm just going to assume things are more or less evened out or neutral for now. As usual, the NASDAQ has a very similar pattern. You can see is that it was actually slightly down on Thursday, but still overall, NASDAQ is also just continuing to do this melt up higher. So the next big drawdown we get might be just similar to what we saw at the beginning of the month, which is in one day, either one of these indices or both of them drop to the 20-day moving average, which is the dotted line, and then that's it, because everybody pretty much accepts that dips must be bought no matter what the reason is. And that's kind of just the sentiment that we're in right now with the market. I'm not endorsing it, I'm just observing it. And of course, as always, I provide this information for educational purposes. Please trade and invest on your own time with your own time horizons in mind, your own objectives, and with your own risk management in mind. Okay, and if you have any questions or comments, put them down below. And as always, share and subscribe to the channel. Okay, so this was the big beneficiary, IWM, the iShares Russell 2000 ETF. It was the big beneficiary of the market breadth surge, and it surged to a new, in fact, those 2 days brought IWM to, yes, that's what I thought, a new all-time, sorry, new high for the year. So that was a major bullish breakout. I was caught flat-footed in that I did get into my regular IWM calendar call spreads, but I targeted the 225 as the pivot point because that was around the previous highs for IWM. And when IWM blew right through that, it really made me drop. Basically, I left a lot of money on the table. I mean, if I had just bought simple call options, it would have been one of the best trades in a while for this year, I think, on IWM. As it turned out, I scraped a few pennies out of that trade, and then I did a new calendar call spread at the 230 strike weekly. And so this one worked out as I wanted the 225 to work out, which is the short side, expired today, Friday. Oh, by the way, it's August 15th. And I'll be going into next week with just the call options. And I actually added one on Friday. Okay, so that is the major indices. Just for giggles, let's take a look really quickly at the VIX. You can see the VIX finally did make a new low. I think this is a new low for the year. Let's confirm that. Yes, it made a new low for the year on Wednesday, and it's trying to stabilize itself. So, because of what's happened last time it's been at these levels, at any moment in time, the VIX could spike higher, which of course would be one of the expected drawdowns for this seasonally weak period of the year. Okay, let's dive into some individual stocks. I'm going to fly right through these that caught my interest. There's a lot of concern that software stocks are weakening, particularly with the threat of AI, even though it's not really demonstrated yet that AI is eating software yet. You know, software used to eat the world. Now people are worried that AI is eating software, but there's a lot of fear. And it doesn't help that companies like Monday.com, ticker symbol MDNY, MNDY, sorry, have bad days like this. Earnings, the post earnings loss was 30%, dropped the stock to, wow, it dropped it all the way back to the beginning of 2024. So I saw an analyst on CNBC making the case for CNBC's Fast Money, making the case that this was well overdone. I'm not so sure. Monday.com is a very expensive stock, so it doesn't take much bad news to knock it down a notch. It's not on my buying list, but I do want to keep an eye on it in case there is some interest that picks up. Now, airlines suddenly spiked, and I just could not really find any good news for this except for the inflation report that came out on Tuesday. I think it was Tuesday, showed even though it was relatively benign, except for core inflation. Well, again, sorry, I'm going to talk a lot about this in my blog, but I'll just go to say that I think one of the key strong points of inflation was in airline tickets. And I think that was enough to spark a huge rally across the airlines. And so Delta Airlines soared 9.2% on that day and has trickled higher ever since. This is another place where I got caught flat-footed. I had a calendar call spread. I thought the airlines like Delta's a pretty strong one. It's above its 200-day moving average, which just sort of trickled along this support line. 200-day moving average is this blue line, but that's not what happened. It dipped down, and I thought actually I was going to end up with a losing position, and now I'm on the other side of that, which is the stock has moved too high. But I think it's going to dribble down back towards the support at some point. So I'm holding on to that calendar call spread. And sorry, I've forgotten my pivot point strikes there. Meta, I want to pull up just because I had done a short talking about how Meta had gapped and crapped at its earnings. After hitting an all-time high and then trickled down into earnings, and it looked pretty weak. But as the magic of technicals can sometimes do, you can see that Meta Platforms, ticker symbol META, stopped cold right at 50-day moving average support. And then the next day, post earnings, soared 11.3%. Now, as you know, I don't trade technicals. I typically don't trade technicals as a sign of what's to come for earnings. That can really fool traders a lot. It just so happened that it worked out in this case. I did not make that trade. And now Meta is in the clear and a clear bullish territory once again. It was really odd to see it gap down after that big post earnings pop, 3%, but clearly that was a buying opportunity as as Meta was just going down with the rest of the market. Okay, Let's take a look at some other individual stocks. Cardinal Health, as you know, a lot of medical insurance companies have been pummeled. Cardinal Health is one of them. In fact, I've barely seen any medical insurance companies do well after earnings. Cardinal Health, ticker symbol CAH, dropped 7.2%. I thought it actually would hit all the way down to the 200-day moving average. So the fact that it avoided that, let's see, the low was 137. Ah, yes. I guess I should have been watching closely. It's hard to see it, but the low for Cardinal Health was $137.75. That is right at, just about right at the 200-day moving average. If I had been paying attention, I definitely would have bought there and seen just how far buyers would take it back up. So you could consider that a bottom for Cardinal Health for now. Now, on the other hand, um, I had been watching. This is when where technicals really gave the signal. UNH, United Health Group Incorporated, sorry, ticker symbol UNH. You know, it's had a very tough time for a while. It was down at one point, I think, 45% or more for the year. Its last earnings report, it dropped another 7.5%, and sellers kept pushing it down to levels I think that had last been seen, let's just call roughly during the pandemic. So, of course, that alone should be a potential buying signal for a stock that has basically historically been very strong. And sure enough, buyers finally started to pick up. And I was watching this, and it never dawned on me what this could be indicating until today. UNH soared 11, basically 12% on news that Berkshire Hathaway and two other, I think at least two other big institutional investors put down some major investments back in Q2. So, of course, anything could have happened since Q2 and now, but the market took that as a bullish sign. I went right after the open, I went ahead and sold a 680, sorry, a 300, $280 put. Reasoning being it's below the 50-day moving average, assuming that UNH is now back in more bullish territory, it should not fall back below that. And even if it does and somehow blows, $7 below 280, which is like 273, that's a point where I have no problem buying back into UNH because that would get me down to a price right before this big gap up. So I thought it was pretty well positioned, pretty well reasoned for my own risk tolerances. All right, keep it moving. Smart Rent. This is a very speculative one. I'm only watching this because the CEO put in some big dollars on buying the stock. As you know, insider buys are a big buy signal for me. I did not go into this one. I think I can be patient. Sure enough, the stock is just sort of middling around right now. I just want to see some confirmation that this 200-day moving average support will hold. So it looks like it is holding. So next week, Smart Rent is going to be on my buying list. Again, this is very speculative, so I'm not going to commit a lot of capital to this because as if I just roll back, right, this stock has been much, much higher. It's at $13. I don't think it's down here for a reason, even with the CEO buying the shares. Okay, Tapestry, luxury retailer, includes the Coach brands. It finally had a bad day, bad post earnings day. It dropped, let's see, 15.7%. That's pretty hefty, but you can see technicals win again. Stopped cold right at the 50-day moving average support. If I had been watching this one today, I would have bought a little bit with a stop below the low, the post earnings low. So Tapestry goes on my buying list next week. I can't quite remember the reason why Tapestry came down, but I know it's very richly valued. I think there's some sales softness in certain countries, but clearly the buyers are already back into, hey, buy the dip mode based on today's 5.3% pop. Okay, CART is one. Back in the day, I used to have this thing called the Amazon scare. Amazon would announce that it's moving into some business and all the related stocks would sell off. Well, such a thing happened back on Wednesday, and Cart, what we know as Instacart, or the company's called Maple Bear, ticker symbol CART, plunged 11.5% as Amazon announced it was going to expand its fresh produce services through Amazon, I think Marketplace. Don't quote me on that. But anyway, a bunch of different stocks in this industry went down. I went ahead and bought Cart stock and sold a call option as Cart I was hoping the 200-day moving average support would hold. It did not. Sellers took it down a notch a little bit again. So I rolled over the call spread so that, the first call went worthless. So I bought a new one, sold a new one, and I think it's the 45 strike. And let's just see what happens. I'm assuming there's not much more downside here. These Amazon panics, they're very abrupt, and usually buyers eventually trickle back in. That's what I'm betting on now. AMD is one. I have stuck with this one for a long time. I was very happy to see um, Advanced Micro Devices, ticker symbol AMD, recovers so quickly from its 6.4% post-earnings loss, and buyers stepped right in. I mean, this is a pattern, right? You're going to see this in a lot of individual stocks. Big post-earning moves down, and then buyers move right in because the entire market is just in this buy the dip, buy the dip, buy the dip mode, almost no matter what the news is. And now AMD, greatly enough, is back to highs it last saw last summer. So I am back in the green on this one. I'm so glad I was buying at low prices as well on AMD. All right, Etsy is one. I've traded in and out. I missed this last big move, but it looks like Etsy will come back down and give me one more entry point. Ticker symbol ETSY. You can see the bounce on the 50-day moving average was a little sloppy, but still, I should have bought in as soon as this 7.6% rebound occurred above the 50-day moving average. So that's my bad trade execution. I was overly focused on the fact that Etsy had been selling off ever since its earnings report. Okay, let's continue for solar. Looks like I'm not going to be able to get the contrary buy. Um, this is another case where the president has been really dogging out alternative energy and green energy and solar stocks. And now today the news was that, hey, the restrictions or the pullback by the administration is not going to be as bad as feared or stringent as feared. And First Solar soared 11%. You could see that the market was sort of onto this, was probably onto the change in sentiment from the administration because despite the bad budget for solar stocks, it did fall back a big amount here, and then it just continued to trickle higher. So anyway, it looks like First Solar is confirming it is in bullish mode, and I'll just have to figure out when I can start nibbling in on this one because I'm really a big fan of First Solar over the long term. All right, Shopify had a great post-earnings move, but sellers are, for some reason, they've been taking profit. So Shopify last week soared 22% post-earnings, ticker symbol SHOP, but it's been weak ever since. So I'm watching this one like a hawk. If it touches 20-day moving average support, that would be a nice first entry point to try to buy into Shopify in the expectation that post-earnings momentum would resume at some point. Okay, Amazon. Just quick note, I wrote about this. I had this old trading rule that you buy Amazon after earnings, no matter what, anticipating that it'll be higher in 2 weeks. Well, it worked out this time pretty well. In fact, Amazon was higher within a week. And so the trade that I put on, it hit its profit target very quickly. But I did not pull the trigger when Amazon neatly and gently tested 50-day moving average support. Amazon.com, of course, is ticker symbol AMZN. And you can see here that it's almost finished filling its post-earnings gap down. So, the lesson I'm seeing here with a lot of these stocks is if they don't crash underneath their 200-day moving average in particular, buyers just want to buy the dips on these relatively strong stocks. So that's what I'm going to be using going forward in this very bullish market as my marker. If the stock is still above its 200-day moving average and it's dipped, even if it's a big dip, a big gap down, it's probably I need to find reasons to buy, not to sell, not to short. Okay, let's keep it moving. COHR. This is one which is going to test that rule that I just said. You could see that buyers, Coherent, corporation, ticker symbol COHR. I think they're in fiber optics. They had a very bad post-earnings drop, 20%. Very surprising given this nice uptrend. I had bought this stock, I think it was on a 200-day moving average breakout, and then I sold it. I can't remember quite when I sold it. I probably sold it around here when the momentum seemed to have stopped. I thought I had missed out I probably would have held this one through earnings too and been very disappointed. But you can see here, let me zoom in, coherent at its lows bounced perfectly off 200-day moving average support, and then buyers step right in today for a 1.9% gain. It's right at 50-day moving average resistance, which is this red line. If it closes above that, then for me, it's a definite buy. I should have been on alert when it bounced off of 200-day moving average. So this is like one of the many stocks that are going to test my theory that no matter how bad the selling going into 200-day moving average support or above it somewhere, it's probably going to be a buy for me. All right, Deere and Company, ticker symbol DE. Here's another test of this theory. You can see how it gapped down post earnings about 7%, stopped cold at the lows of the day, right at 200-day moving average support. And guess what? Buyers stepped right in and bought for 2.1% gain. I'm actually not interested in buying Deere here just because I don't think there's a lot of upside. Even if it gets to the 50-day moving average, I think it'll probably just keep drifting around. But again, this is another stock that may be confirming this growing theory that I have about stocks' behavior while the stock market is so bullish. Now, here's one, Applied Materials, which is a semiconductor equipment maker, ticker symbol AMAT, which did gap down below earnings, post earnings today, 14.1%, but it's below the 200-day moving average, so it is not on the buy list. And something is wrong with the semiconductor equipment makers. I keep seeing very bad post earnings performance. So this one's on my radar just to see if this stuff is going to start leaking out into other semiconductor stocks. And lastly, let's take a look at CROX, the shoemaker that just keeps ticking. I have been so surprised at this one. Uh, it also had a very bad earnings drop, 30, almost 30%. But the buyers, they step right in. I have no theory to explain this. I think I saw some upgrades or some insider buying yesterday or today. So you could see that the buyers, I mean, there must be a lot of Crocs fans because after the dust settled on that first bad post earnings response, buyers have just been scooping up all of this stock. And the reason why I think this is important is look, Crocs has just been in this big trading range for quite some time. In fact, we can just extend it if we want all the way back to 2021. The stock has really been going nowhere, um, even though post-pandemic or during the pandemic, it took on a new, fresh life. So I don't know what to make of Crocs. It's interesting that it's just bouncing around in this big trading range, and I guess that's what the traders are betting on here. Okay, so that will do it for today. Of course, there was a lot of news last week, this previous week, a lot of trading action, and a lot of big earnings moves. So note that coming up will be Jackson Hole, where the Fed, I expect to speak dovishly about monetary policy and will give further encouragement to all this bullish sentiment. And then the Fed meeting in September will probably have a rate cut. And the momentum may just keep going from there unless we get some more bad readings from inflation. All right. So thanks for checking this out. Again, if you want to get more of this content in timely fashion, go ahead and subscribe, hit the subscribe button and hit the bell button so you can get notified. I write this content as well at my blog, drduru.com/122, all letters. I look forward to checking you out again the next time. Take it easy.